Hey, Ryan Lee with Planet Cheapskate. I'm back, feeling all right. Wanted to pop in here and do our rate update going into the weekend. I'm a little bit early, but I got a lot of things going on. Had a crazy, crazy week. I apologize. The rate update was not done last weekend, and it's because I had a heat stroke. Oh my gosh. We've been having some hot ones out there. I think they said the last week was the hottest on record. And so it was hot. I was out working on the house. Me and Denise, we bought a new house. We're super stoked about it. We're awesome. We're doing all this work on it, and I bit off a little bit more than I could chew. And so I had went to work on Friday and got a lot done. And then I said, "Hey, I'm gonna go do some work on the house, and I'm gonna finish it up, and then I'm gonna go do the rate update around 1 o'clock. 1 o'clock, and the noon hour hit, and it was just hot, and I couldn't do it. I was out. I had to go and actually take a nap, and I was in bad shape. So we got our rates this week. Really wasn't too much going on last week in the rates, anyways, because of the holiday. Everybody was kind of on exit mode, but there has been a lot of excitement this week. Not good stuff. A lot of bad reports coming out. The Fed has been, playing their games again, up to no good. And so some of the minutes were released today, and it is looking like there's going to be a couple more hikes for the Fed rate, which is the rate by which all other kind of borrowing is gauged off of, because the Fed rate is the rate with which banks borrow money from each other, and it's seen as like the most secure risk. So on any sort of a return, any sort of an interest rate, the amount of money that the investor gets back is based upon the risk that they take on. And so on the Fed rate, it's very, very low risk, because it's like this bank needs some money, they're borrowing from this bank. Very secure. Until recently, with some of the crypto banks, very unlikely for banks to go bankrupt. They're usually good for the money that they're borrowing. And so we're probably going to be looking at around 5.5, 5.75 by the end of the year, and that's the Fed rate. So that's the safest bet. And so that just means that you can factor in that our rates are probably going to be not better than 5, not better than 5.5, 5 3/4. We're probably going to be in the 6s, the 7s. Unfortunately, I was hoping that we would maybe get some rate relief, but it's not looking that way. But I'm hoping next week we can kind of get a little bit of a rebound back to where we were, because I think we were in a pretty decent spot where things were a little bit comfortable. Conventional floating around the upper 6s, 7, and then FHA, flirting with 5 a little bit, into the 6s. That's really where I would like us to be. I feel like that's a comfortable amount where people are able to get a good size house and have a decent payment. So with that said, rates are up a little bit. Let me look at the previous rates to see. Yeah, they're not looking good. Before I begin, good luck to my realtor partners out there. If you need any help this weekend, let me know. I am working when you work. I can get you those pre-approvals cranked out. I can help you market any properties. If you have any listings, if you're doing any kind of showings, let me know. I can get you some material. I can come out, hang out, bring you coffee, whatever you want to do. I can do that for you. The rate environment is looking rough, and it looks like that the rest of the year things are going to be a little bit more difficult. Not impossible, but a little bit more difficult. You need a good partner. You need someone who is in this with you, who can educate your borrowers, your buyers, and provide them with the certainty that they need and the education that they need to understand that these rates are not forever, and they're not too terrible, given what we've had throughout history. We're just coming out of a time where rates were at historic lows, and so these rates don't look as good. But if you compare them to some of the rates that we've seen throughout history, they're actually not too bad. They're about average. They're actually a little under average. So before I begin, let me just explain these are not rates that you can go to a bank or a credit union and get. When you walk in there, when you call them up, they're going to give you whatever they feel like they can get away with. These are rates that I get by making 50 of the most competitively priced banks, lenders, everything like that compete every Friday. I send out just an average borrower, someone who has a 700 credit score looking to borrow $250,000. And we do a 30-day lock, and I never charge any points. So these rates can be beat. You can go to a lender and be like, hey, Ryan's saying this, and they're going to be like, oh, well, I can beat that. I'll give you this. The key is how much does it cost you? Because I can give you 5% interest rate. I can give you a 4% interest rate. It's going to cost you $20,000, $30,000 possibly. We'll have to see, but always ask how much it's going to cost to get that rate, because it could be a slick and nice rate, but is the cost going to be more expensive? So these are rates that I get you without charging any points. Every week we make 50 of the most competitively priced banks compete, and then boom, I show it to you. I wish more lenders would do this. Let's hold your lenders accountable. Let's hold your loan officers accountable. Let them put their rates out there, because I do this every week. I put my rates out there. So without further ado, let's get right to the rates. Okay. Conventional is at 7.375 with an APR of 7.669. FHA is at 6.75 with an APR of 7.468. VA is at 6.75 with an APR of 6.959. And USDA is at 6.875 with a APR of 7.3727. I'm sorry. APR of 7.327 for the USDA. That's my rates. That's what I get by making 50 of the most competitively priced banks compete. So conventional is up about probably about a third. And then the Govy loans, FHA, VA, USDA are up about 0.5%. So huge move in the market. Unfortunately, it happens. I'm thinking that we maybe get some good news next week, and maybe we get a little bit of that rate give up that we got, a little bit of that back. But hopefully so. It's good seeing you. It's good being back. I feel like I was gone forever. Okay, Rodney is saying with 3 points, how will FHA be? Rodney, it really depends on your lender. All lenders are priced differently. So 3 points, paying 3 points, which is, for those of you out there who don't know, 3 points is equivalent to 3% of whatever you're borrowing. So not the sales price or the offer price that you're putting in. 3 points is equivalent to 3% of whatever you're borrowing. So all lenders are going to price differently. So my advice to you, Rodney, is to work with a broker. I have a link in my description. If you want me to run some numbers with you, I can do that. Just schedule something. I'm available. I can service 48 states, all states but New York. And there's one more. I can't remember the other one. New York and one other one. I can't remember which one it is, but I can help you in all those states. So let me know. I can run some numbers, see what's best for you. Hopefully, as we grow this channel, this will be an avenue where you can ask me questions every Friday. Because popping on the rates, I can do that in 3 minutes. But I'm happy to answer any questions. Rodney, reach out to me. I'd love to run some numbers for you, let you know what 3 points would do for you. And it just depends on the lender. They all price differently. So that is the rate update. Hope everybody has an awesome and safe weekend. I will see you on the other side. Take care.